Aditya Puri of HDFC Bank. Thank you for talking to Bloomberg. Shall we begin with the Indian economy?
Sure.
Now, the central bank's just come out saying growth is going to not be quite as fast as it hoped, more 7.2% than 7.4%. What worries you? What are your concerns about the Indian economy at the moment?
See, I think has there been some slowdown? Yes. Will we be there somewhere between a 6.9 to 7.4? I think that's a fair assumption. Economics was never a very exact physical science, so somebody's got to be right, but I think that's a pretty good growth rate.
And out of the various imponderables hanging over this, one thing people always talk about is the bad debts and banks. Now, you've done well on that. I looked, and your bad debts, gross bad loans, are 1.36% against over 10% for the industry.
Yes.
What did you do differently?
I think what we did was a very clear definition of our target market, risk, reward, and constant monitoring if any of our fundamental assumptions were violated, i.e. either the margin went down or our default rate went up. And based on that, and we strongly believe in good old banking, I give you money, you give it back. And we need to So I think to some extent what happened was, at least for the large NPAs that accumulated, was probably less than optimum assessment of the capital project risks.
Is that an oblique way of saying the state banks weren't very good at this?
I will leave it at what I said. I said that we didn't do that because we didn't find the risk-reward matching.
But by most measures, there is a massive gap between the private banks such as yourselves, which have quite low non-performing loans. Once you include all the state banks, it
Yes.
jumps a lot.
So did we need a lot of improvement in the state banks? I would have to say yes. Have we made progress? I would say substantial progress. So if you see what the regulator has done between recognition, one, it did an asset quality review. So we've recognized our past sins. Two, they set up mechanisms for faster recognition of problems. Three, they set up the bankruptcy code, and that some people had started thinking they didn't have to repay the bank loans. Four, they moved in terms of changing their inspection basis. Five, the government is moving in terms of consolidating the public sector banks to reduce the risk and improve better, because obviously State Bank and Dena Bank are not the same.
Do you think the election makes any difference in this? I'm not asking you to rate Mr. Modi or Mr. Gandhi, but would there be a change at all if we were to switch from the BJP to Congress in terms of how banks are treated?
The good thing in India is once things are in the public domain, it doesn't matter who's in power. This will achieve its natural course. So I think if your question is whatever is in place for the financial sector reforms as well as processes, plus what is required going into the future, will that continue? My answer would be yes.
And is there one particular financial reform you'd really like to see?
Well, there are a couple of them. I think we need to have a debt market. I think we must understand that liquidity is definitely important. Other than that, I don't think there is that much, but that debt market says a lot.
If you just push on the debt market, that would mean India having a capital market more similar to
yes,
America, say.
Having a capital market with the interest-free yield curve with the so that we can have what we call the bond currency and derivatives. So I think that will have to come about. They're working on it, but we do need that if we need to finance properly where the long-term financing should come from, where the short-term financing would come from, which needs a very clear look from ground level zero as to where the funds are going to come from, what are the assets available, do we need any reforms in our regulations, and I think that's in the process.
As long as I've been coming to India, which is sadly a long time, people have been talking about the idea of an Indian capital market. And one theory is that banks, such as yourselves, are actually quite happy with the current system because it means you're the only game in town.
That second theory I don't agree with because I can't make a lot of money that I would make in derivatives, and we are a major participant in the capital market.
You think it would be better for you if there was
I would think so, yes. It would also allow us to manage our risk better and introduce more products.
Can we talk a bit about other forms of competition? Well, you've had all these non-bank financial companies, and they have not always been a great success. You have IL and FS, they blew up last year. Is that mess being sorted out? And when roughly do you expect that to be sort of finished?
I think the NBFCs, and I think it's recognized here.
That's non-bank financial companies.
Non-bank finance companies actually needed to have regulated themselves better. But now the regulators are coming and putting in place. What happened was they had an asset liability mismatch. They didn't have a liquidity cushion. And they probably needed stricter inspection. So what has happened now is we at one time had a crisis. Now I think the crisis has gone. Problem still remains. So two things are happening. One is the banks have tightened up. Two, the regulators have tightened up. Three, these companies have slowed down their growth. Four, they're trying to dispose of assets and get rid of the asset liability mismatch. Despite all this, there will be some...
Did you have a kind of end date for that?
I would say within the next 12 to 18 months.
Are you worried about the insurers and the mutual funds and contagion going into that?
See, I have my strong opinions on the mutual funds. I think people must understand when you compare a bank and a mutual fund rate, you're comparing an apple and an orange. The fact of the matter is in the mutual fund, if there is contagion, you lose your money. I think a lot of people must realize that. And that's one risk globally that there is there. There's not enough of a capital cushion. And there's not an understanding when these guys, their fundamental marketing proposition is that we've got a higher rate than the banks, they go in for riskier assets. So that is not just a worry here, that's a worry globally. But that is a worry for the individual investor, not for the banking system. Because they have something called side pocketing, which says for this amount you won't get the money back. So if you look at the structure of a mutual fund, ultimately it says, it's your money, I've invested on your behalf. If you lose, you lose.
Because there's no deposit insurance in the same way as you get with
No,
banks.
there isn't. But and that, I think, is a global issue.
Another element of people coming in, and you may again say this is like apples and oranges, is all the tech companies. You've got Paytm, backed by Alibaba. You've got Google Pay. Surely the future belongs to these much slimmer, carrying less costs, more modern technology companies. Are they going to take over payments?
I don't think so. I do believe, will they give competition? Yes. It'd be foolish to ignore it. What it has forced people to do is understand what the secular shift in technology, computing, social mobility, artificial intelligence, how this can help you change your operating model as well as your proposition to the customer, the same way as an Amazon or a Netflix change it in terms of being able to give a better product to the customer. So will we have to substantially improve our technology platform? Will we have to improve our user interface, which has to be frictionless? Will we have to have a more pleasant customer journey? The answer is yes. Will we be blown out of the water? No, if we do all of this. In addition, if we change, we have the same opportunity. For instance, I can do a loan in 10 seconds for an existing customer. Now you can take FinTech, you can take Google, you can take who you want. I want to see a 10-second loan. We've also moved our technology platform into an API platform where we are even opening up our APIs on a collaborative basis with a Google or a Facebook. And also, I think they would be worried out of their pants in becoming a bank. So there's limitations as to how far they will go. We have changed ourselves from actually a banking experience to a financial experience using technology. So today, we give you an omni-channel experience. You can choose an access device of yours. Let's take the mobile phone. On the mobile phone, you can do your banking. You can get your loan. We can give you a shopping experience across the entire range: grocery, air tickets, bus tickets, movie tickets, hotels, etc. Basically, we have a marketplace platform that sits on our site where we aggregate various merchants. In addition, we give a shop and compare and land you at Amazon. You pay with our credit card. It's even cheaper than buying just from Amazon. So will things change? Yes. Will we be blown out of the water? No.
Do you think that, look forward 5 years' time, you'll still see banks looking roughly the same as they do today, or will they be very different?
No. I've been trying to learn from JP Morgan, Bank of America, etc., and try and validate what we're doing. I think there will be the banks that have moved on technology, the people who are providing at the right price, who have lowered their own cost of processing and improved their service. So there will be banks who adapt to the change and use technology appropriately, will look different. They will have a different customer proposition. I think we are 80% there. I think, having just come back from the US, talked with Bank of America, I think they're also there. We learned from them. I visited Silicon Valley as well on the fintech side. So we have things to learn on deep learning. We have things to learn on clustering and then clearance. We have things to learn on digitizing our mass affluent. We have things to learn on data storage. All of that, we are learning. So the people who learn, who can adjust, come up with the new bank which should look like 2 clicks, user interface which is smooth, and a much wider product range with the trust and security. And you haven't seen the effect as yet on privacy. You're affecting elections, etc., with some of these guys you talk about. Welcome to the regulations.
At the other end of the scale, you have these very advanced technology companies. I gather one thing you've been doing is you've been going out trying to reach, I suppose, the poorer bits of India. Where do you think your competitive advantage is there? You've been pushing into villages, much smaller towns.
Yes, I'll tell you what has happened. I think what we should recognize for India is between private and public sector, what has been done in terms of taking broadband to the interiors. We actually have an opportunity to not leapfrog, but pole vault on technology. What happened is semi-urban and rural India is where 60% of the country lives. It has traditionally not been served by the organized banking sector. We, over the last 4 years, have been testing our products. 50% of our distribution is in semi-urban and rural India. And approximately 18 to 20% of our business comes from there. That was prior to roads, electricity, and telecom reaching the interiors. So when I went into the interiors and I stopped at a shop, like a one-horse town, like it's pretty much in the US as well, he obviously caters to about 200, 250 villages around him. I asked him, does he want the capability of contactless or on our stack on the UPI or a debit or credit card? And he said, yes, but I won't pay you for the terminal. I said, you don't need a terminal. I'll give you a POS app, which will allow you to do the same thing on your mobile phone. Similarly, we've had our rural initiative and our sustainable livelihood initiative, which is actually creating viability in semi-urban and rural India, where between our branches, the Agri Initiative and Sustainable Livelihood, we have 35,000 people on the street.
A branch is important in this kind of futuristic version of banking where you're talking about even the poor of India, who many people would immediately think are hard to bank. You're talking about a world where they have phones, where they have the ability to be able, you could check who they are, and you can reach them. Does that in the end mean you don't need branches?
No, you will need branches, but a different type of branch. You don't need it as the outpost of the colony and a big one. But, the guy, when he is there, he's just making a transition into technology. And if he says, if I have a problem, who do I go to? You say your call center. By the way, our call centers in banking need major improvement. Press 1, 2, 3, 4, that won't work.
Yes.
Then he won't open the account. So for acquisition, I will probably need a bigger signboard and a smaller branch, so I can say, if you have a problem, you go there. Yeah. But there will be more sales and service outlets, plus the initial acquisition. Will branches disappear? I think not.
Aditya Puri, thank you very, very much for talking to Bloomberg.
Pleasure. Thank you so much. I really enjoyed that.